FY23 earnings conference call of Supriya Life Science Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Rasika Sawant from Orient Capital Investor Relations Partner. Thank you, and over to you, Ms. Rasika.
Thank you, and welcome to the Q1FY23 earnings conference call of Supriya Life Science Limited. Today on this call, we have Dr. Satish Wagh, Chairman and Managing Director, along with senior management team. This conference may contain forward-looking statements about the company which are based on beliefs, opinions, and expectations as of today. Actual results may differ materially. These statements are not the guarantees of future performance and involve risk and uncertainties that are difficult to predict. A detailed safe harbor statement is given on page number 2 of the company's investor presentation, which has been uploaded on the stock exchange and company's website as well. With this, I hand over the call to Dr. Satish Wagh for his opening remarks. Over to you, sir.
Good afternoon and warm welcome to all the participants. Thank you for joining us today to discuss the Supriya Life Science Limited Q1 Financial Year 23 results. I am joined by Dr. Shirish Ambaikar, the Chief Executive Officer, Mr. Ashish Nayak, the Chief Financial Officer of Supriya Life Science, and our Investor Relations Partner, Orient Capital. I hope everyone got the opportunity to go through our financial results and investor presentation, which have been uploaded on the stock exchange as well as the company's website. We started financial year 23 on a good note. Despite the ongoing crisis between Ukraine and Russia and the extremely unstable economic environment, we have been able to register an operating revenue growth of 32% over Q1 financial year 22, as well as a healthy EBITDA margin of 31% and PAT margin of 25%. Our focus has been to register new products in the regulated markets and further penetrate existing products in the regulated markets. To strengthen the portfolio, we are adding more products in the basket from existing and newer therapies. Other than the aforesaid mentioned, the important focus areas where we are experiencing excellent progress includes backward integration, increasing capacity for the future prospects, and capitalizing on CMO, CDMO potential. We committed on improving infrastructure, which includes debottlenecking and the development of 2 new R&D centers and 2 manufacturing blocks. Our endeavor is to healthy revenue growth while maintaining healthy margins and upgrade to the evolving GMP and EHS standards. With this, I now hand over the call to Dr. Shirish Ambaikar, our CEO, to share the key highlights of our business performance. Over to you, Dr. Shirish.
Thank you, Mr. Wagh. Hello, everyone. As mentioned earlier by Dr. Wagh, despite the volatility in the markets due to the Russia-Ukraine war and supply chain disruptions, we have been able to register a stable growth. Our measures to counter these challenges by building up inventory of raw materials to ensure smooth operations have worked well. Raw material supplies were well organized with no significant impact on capacities. Result is that we could deliver a decent top line while maintaining healthy EBITDA and PAT margins. We are working in R&D to add new products to our product basket and are expanding into newer geographies with existing products. Supriya Life Science is committed to providing sustainable and reliable performance. Our strength is in large-scale chemicals manufacturing, and we have the experience in handling hazardous complex chemistries. Significant progress is made in the CMO, CDMO space. Work is in progress with various companies ranging from big pharma to innovator companies to work as a partner for supplying products as per their needs. Work is now in advanced stages for the first commercial quantities to qualify Supriya Life Sciences as a source for a couple of companies. Work is progressing on building and expanding capacities. A new warehouse facility for finished goods is now ready to be commissioned, and we are setting up two R&D facilities, one at Lote for product life cycle management and backward integration, and the other one in Ambernath, along with a pilot plant for new molecules and CMO and CDMO business. The lab at Lote will be operational in Q2FY23, and the R&D labs at Ambernath, along with the pilot plant, are expected to be operational end of Q3FY23. Currently, Supriya facilities are running at full capacities. As regards manufacturing capacity expansion, we have started construction work on a new block called the E block, which is going to add 350 cubic meters or kiloliters of reactor capacity in Lote. A new manufacturing block of 70 kiloliters capacity attached to the new R&D at Ambernath is also coming up. Along with that, we are currently debottlenecking our manufacturing capacities in existing blocks. In two blocks, namely A and B blocks, capacities are being increased and debottlenecked for running products. We are seeing an increase in demand for some of our current mature products. Lastly, I would like to touch upon company's backward integration business model. Our top 12 products out of about 38, we are backward integrated, and these contribute 70% to our sales. We are extending the backward integration model to a new products as well, so that we maintain the competitive edge. A large part of the growth and sustainability was driven and will be driven by these backward integrated products. With this, now I hand over the call to Mr. Ashish Naik, our CFO, to share the key highlights of our financial performance. Over to you, Ashish.
Thank you, Dr. Satish and Dr. Shirish. Thanks to the Orient Cap team for being here, and thanks to all of you guys for being here. I will now share the operational performance for the year Q1FY23, that is the first quarter for FY23. This first quarter was a good quarter for anesthetic therapy. Anesthetics, which was contributing about 113 million of operating revenue in Q1FY22, has now contributed 500 million rupees in Q1FY23. That's almost 5 times what we did in the same quarter last year. Our exports continue to be 83% of sales, and share in the regulated markets has increased from 33% in Q1FY22 to 44% in Q1FY23, primarily driven by increased penetration in the European markets. Talking about the quarterly performance, companies reported revenue from operations of 1,014 million in Q1FY23 as against 769 million in Q1FY22, delivering a growth of 32%. EBITDA stood at 312 million in Q1FY23 as against 154 million in Q1FY22, a jump of 102%. EBITDA margin stood at 31% in Q1FY23 as against 20% in the same period last year. Profit before tax increased by 116% to 301 million for Q1FY23 as against 139 million in Q1FY22. Profit after tax stood at 252 million for Q1FY23. As a percentage, it was about 25% of the operating revenue. Value growth in regulated markets compared to last year, same quarter was 106%. Despite of the volatility in the markets, due to the war and lockdowns on account of COVID, we have been able to register a strong growth. We ended Q1FY23 on a very strong note. This is all from my side. We can now open the floor for questions and answers. Thanks to all of you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhaval Shah from Zurich Capital. Please go ahead.
Hello. Hello.
Yes, Mr. Shah, please go ahead.
Hello, Mr. Wang. So a couple of questions from my side. First one, sir, in the reported quarter, how much of the revenue has come from the Block 4, which had gone live in Q1/22?
Yeah, to reply to that, see, all these blocks that we have, 4 blocks, they are interconnected and integrated. So it would be impossible to identify as to how much sale is coming in from a particular block. Because understand our given product, let us say, the initial stages may be through the first block and then the final stage may be through the 4th block. So it's a combination of all. So it's very difficult to identify as to what's coming in, what's the revenue generated from particular block.
Okay. So the reason for asking this is that like in FY21, we were operating at an optimal utilization of around 70%, 71%.
Yes.
Okay, and that is the optimal as per the presentation. Now, and we did around 400 crores of annual revenue. Now, Q1/23 we are at 100 crores. So, what is the increase in revenue? And now, and this Q1/23 will have a new added block as well. And now the new block as per presentation is operating at 70% utilization. So just wanted to understand what is the change in revenue from the Q1/FY21 when we were at a company level operating at 70% and now also we are at 70%, while the quarterly run rate is at 100 crores.
Yeah, so if you look upon it, what I can tell you is there has been a phenomenal growth, and that's something that said in my speech as well earlier, in the anesthetic category. Okay, the anesthetic category, if you look upon it in terms of value, the sales has been almost 5 times what we did in the same quarter last year. Okay, so that itself gives you an idea. It's jumped from almost 11 crores to 50 crores. Okay, so that itself gives you an idea as to as far as the overall increase in the value is concerned. Also try and understand that we have also increased the inventory levels for the finished goods, okay, as compared to what we were at in Q1/FY22. So obviously the production has also, one is the sales which has happened, and the second part is it is lying in stock in terms of the orders that we have in hand. Yeah.
Okay. And sir, thanks for that. Now, secondly, given the kind of expansions which are going on, which is giving us a visibility of around 810 KL in capacity, so is it safe to assume that we should be around 1,000 crore sales by FY25 on a 810 KL capacity?
Okay, I will answer it in a different way. I will put it, currently, if you look at my asset turnover run rate, okay, FY21 was about 4, where I was sitting on a gross block of 100 odd crores and my revenue was around 390 odd crores. So the run rate was about 3.9 to 4 asset turnover. FY22, we were at 2.85. Okay, but that was, as I said earlier, since the new 4th block had just got operational in that year, and it takes about a year and a half for any block to reach its peak.
Correct.
As I see going ahead, because there are, let us understand that revenue is a factor of 2 things. One is which regulated markets how much of that percentage is going into regulated markets. Okay, because in regulated markets, because of the higher average selling price, the value would be higher. That's one. And the second thing is the addition in capacity. And so to that extent, if you look upon it, going ahead, we will be around asset turnover about 3. That's what I'm looking at because of the new capacities which are going to come up. So
correct.
I am sitting on a gross block of 200 crores around date, and in addition to that, over the next 1.5 years, we are adding another 230 odd crores. So 430 crores, 440 crores is what we are looking at gross block. So we can very well imagine 3. Yeah. But understand that would be done once these blocks start reaching their peak capacity.
Correct. So as
they start reaching their peak capacity, and it takes about 1.5 years for any block to reach its peak. Also understand that the new products that are being rolled out, they will be first rolled out in the semi-regulated market, and it takes about 2.5 to 3 years for any product to enter into the regulated market. So you have to give us that much time, at least, by 26, I would say 26, 27 is when I'm looking at that kind of a top line.
Acha. So Q2, so what two expansions which we are undergoing right now. So one is on the adjoining plot of land which is around 12,500 square meter, and the other is 20 kilometers away of 25,000 square meter, 24,600.
So let me. This is Shirish Ambedkar. Let me answer that.
Sure.
A new block of 350 cubic meters capacity. The work has just started at Lote site. The construction has started, and typically during monsoon the construction is slow, but it will pick up speed. But we have taken care of the basic, I would say, construction requirements, and work is progressing. Typically it takes 12 to 15 months for a block of this size to get ready. So somewhere next year, next financial year, Q1 or Q2, we will start commissioning this. And as Ashish mentioned, it typically takes 1.5 years to do the process validations of the products that are targeted. Thereafter, the regulatory approvals. So the capacity utilization will happen in phases starting, let's say, 18 months from today, I would say, with the new capacities. The second block is coming up in Ambernath, where we have an existing site, and we are setting up our main R&D center there to cater to CMO, CDMO projects, and this would need scale-up facilities. So it will have a pilot plant along with a semi-commercial capacity plant of 70 cubic meters capacity, which will be multi-purpose in nature.
Correct. And this Isambe plant is for the growth beyond this 810 KL, correct?
That's right, sir.
Got it, sir. And the last question now, it's a short-term visibility question. Now, last year, second quarter, we had a very fantastic show off. We did around 150 crore top line with around 53% of EBITDA margin. So, do you think you will be able to show growth over this in the second quarter?
Let me not commit on any quarterly targets, but what I can tell you is for the full year, we will be doing very good, and the margins will also be at a very healthy rate. Yeah.
Okay. Thank you very much, sir.
Thank you. Participants who wishes to ask a question may press star and 1 now. The next question is from the line of Keshav Kumar from Laxmi Investors. Please go ahead.
Hi, good afternoon, sir. Sir, as far as I understand, ketamine has been generic for a long time for anesthetic and analgesic purposes. So in the US, ketamine used there is a racemic mixture of SNR enantiomers. In EU and LATAM, it's esketamine. But esketamine is being repurposed for depression and treatment-resistant depression, so on and so forth. For example, FDA approval for Spravato in 2019, as well as a few other clinical trials are underway. So the chemistry is pretty much out there, but I'm trying to understand if there's been a favorable shift in pricing for esketamine because of this, maybe due to some demand-supply gap. Like, for example, a sizable difference in cost for Kepilar versus Spravato. So what used to be off-label is now getting formalized. So could it be we are getting this benefit of mental disorder repurposing leading to shortage of esketamine market, and that in turn leading to pricing benefits?
The volumes are not there yet of esketamine. In the US, as a competition to Spravato, some generic companies are working with us, but it is too early to say about how the pricing will evolve on that. We are working with some companies in the development phase.
Okay, so just to invert this question, from 2016 and 17 to now, and also from last year to this year, because we've seen sizable jump in our revenues. What's been the change in per kg prices or for esketamine?
As of now, these are stable over the last few years.
Okay, so the growth has come largely because of volumes?
Yes.
Okay, all right, sir. I'll come back in the queue. Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Nishant Sabnis from Sabnis Financials. Please go ahead.
Hello, sir. Thank you for giving me this opportunity. I just had a quick question on the margin profile of the company. I mean, the raw material prices have subsided a bit. So what's your view on the margin profile going forward, sir? If you can give some guidance or any information directionally also, that will be really helpful.
Yeah. We have been stating this earlier, and that's something which Dr. Shirish has stated in his speech, is almost 70% of the revenue which is being generated is for products which are backward integrated. Okay, which means that we start with the basic key starting material. So if you look at, and we have been having a very close eye on the pricing for our raw materials. So as far as the key starting materials are concerned, we are not seeing any major jump in the prices. Okay. Yes, the prices for solvents have gone up thanks to the war, but again they have come down now. And as such, if you look upon it, the pricing for the solvents, the impact on the final costing for the product is not much. So as such, there has not been any major impact on my costing for the products. So even our dip in the solvent cost won't have major impact. And as far as the key starting materials are concerned, as I stated earlier, they have been almost constant. Nothing major. No major changes. Yeah.
Okay, understood, sir. This is helpful. Thank you.
Thank you. The next question is from the line of Yogesh Tiwari from Arihant Capital. Please go ahead.
Yeah, good afternoon, sir. Am I audible?
I'm so sorry,
Yes.
Mr. Tiwari. Can you please speak a little louder?
Yeah. Am I okay now? Am I audible?
Yes, please go ahead.
So, sir, actually, I had a question on the regional revenue. So, it looks like that the proportional revenue from Asia has declined. So, just wanted to understand if you can share if it is related to the lockdown in China and how do you actually export to that country? If you can share around that.
It is a factor of the product mix. Okay. Some of the products, and this is a cyclical thing, it's a seasonal thing. Some of the products do exceedingly well in some quarters, okay, and those quarters, this particular year, we have done exceedingly well in the European, the Latin, as well as in the American markets, North America, okay. But yes, Asia, if you look upon it, that has been a marginal decline. That has been a decline of almost 24%. So yes, that is there. Yeah.
So, sir, this is related to the China lockdown? Just to understand that.
Some aspect of it is on account of the China lockdown, yes. But not the entire impact is because of China.
Okay, and sir, just to understand, do you export through the Shanghai port, and how do you, what were the steps taken by the company in a lockdown in China? If you can.
So in a lockdown, if you look upon it, since there is the ports have been shut down, we have not been able to export much. Okay, whatever we have been able to export are small consignments and nothing major as of now. But we are expecting the ports to open up and things are slowly getting back to normal. That's the information that we have got. So going ahead, we expect things to normalize. And in any case, any consignments, if we are not been able to ship them in this particular quarter, they spill over in the next quarter. So as far as the financial year is concerned, we are well on track in terms of what our projections are.
Sure, sir. And lastly, on the Europe and this US revenue mix. So it looks like that the contribution of Europe on a percentage basis has come down, while that of North America has increased. So if you can share any product introduced or...
I am looking at Q1FY22 versus Q1FY23. Q1FY22 contribution from Europe was 10%. It has gone up to 20% on a higher top line. So definitely Europe has in fact in terms of absolute value, the turnover has almost gone up by 5x. We did about 11 crores in Q1 FY22 as against 50 crores in this quarter. Okay, so there has been an increase, and as far as North America is concerned, again we have been able to penetrate and do higher sales over there. Some of the products which are there, I mean, you know, all the therapies that we are into, anesthesia, and these are products which have been doing good. So yeah, so we have been able to increase the contribution from these geographies.
So, sir, any new product or any new launches in North America, because the contribution has increased? So, just wanted to understand that.
No, it's higher penetration of the existing products into the American markets.
Sure. Thank you, sir. I'll get back in the queue. Thank you.
Thank you.
Thank you. The next question is from the line of Siddharth Purohit from Investment Advisors. Please go ahead.
Yeah, hi, sir. Sir, our other cost has been relatively, on a higher side. And if I look at even on quarter-on-quarter, in absolute term, it is same. So how should we look at it? Would it be a function of the absolute amount of top line that we do? Or was there any one-off or maybe regulatory cost involved in this also?
Other expenses, you're referring to other expenses in the P&L, right?
Yeah.
So if I compare it with Q1 FY22, where we had a total of 135 million in Q1 FY22, it has gone up to 224 million. Okay. But if I compare it with Q4 FY22, we did about 223 million. So it's almost at par with what we did in Q4 FY22. But if you're comparing it with Q1 FY22, keep in mind that that was the quarter in which the fourth manufacturing block was operational. Okay, so that was one. Plus, we have also increased by debottlenecking the capacity for our existing blocks as well. So yes, with that, some of the other expenses mainly contributed by power, I would say. So the power cost has gone up, obviously, because the new block has got operation, and it is a much bigger block as compared to the earlier three blocks. So yeah, so that's the main reason. I mean, but going ahead, we do not see any major spike till the next two blocks start getting operation.
So in a steady state basis, what should be the normal run rates as a percentage to sales? There will be multiple overheads, I believe, but except the one-off cost that you said, what will be the steady state?
It would be at par with what we are seeing in this quarter, because in the last two quarters, the other expenses has remained constant in absolute terms.
Okay. So there was no regulatory, filing cost and all involved in that, what you're saying? One-off cost.
These are routine recurring costs which keep on happening. So if there was something in the last quarter, it would be there in this quarter as well. To be lab expenses, power expenses. Power has been a major contributor, but other expenses are there which have gone up with the fourth block getting operation. But nothing one-off or major amount in this.
Okay. Thank you, sir.
Thank you. The next question is from the line of Rajdeep Singh from ASK Investment Managers. Please go ahead.
Hello. Hi. Good afternoon, team. Am I audible?
Yes, sir, you are. Please go ahead.
Hi. Sir, just wanted to understand, you said the growth in Europe was higher in terms of absolute also and in terms of percentage share as well. Just wanted to know, in terms of demand, are you seeing increased demand from your end customers who are looking to take you as an alternate source of suppliers because of the China lockdown or maybe Russia-Ukraine crisis? What is the sense there?
If you look upon it, we have been in the European market for the last almost 4 to 5 years. Okay.
Right.
And with every year, we have been able to penetrate and become the first source for some of our customers. Okay. So with that, we have been able to get a much larger share from our competitors who are there. So that's the main reason I would say. Yeah.
Okay, but this is as usual business, nothing.
This is as usual business, and I hope it continues the way it is.
And I hope for the good. And sir, and lastly, if you can help me corroborate your capacity expansion, because you say ki 810 KL will come by Q1 FY24. Today your capacity is 547 KL, correct?
Yeah. Yes.
Correct. So the difference is 263 KL, right? And you're saying block E is 350 KL and 70 is Ambernath. How do you correlate this, sir? Thank you.
Okay. So the block E is being constructed, to move activities from an older block, which would later be decommissioned, which is approximately 150 cubic meters.
Okay, and that is why you say this 340 KL will replace an old block of 145 KL.
Correct.
Acha, okay. So this is one. 70 KL is over and above this, right?
That is over and above. It's at the site in Ambernath. It is going to be a manufacturing block attached to the new R&D center for scale-ups and commercialization.
Okay. And by Q2 FY23, the block which will be available is for backward integration, correct?
Q2 FY23, no new block will be available. That is the R&D building with new labs for quality, warehouse, three activities mainly: quality control labs, quality assurance, R&D, and finished goods warehouses.
Okay.
That operation in this quarter. Yes.
Okay. Yeah, because sir, was to understand that in one of your slides you are saying your capacity utilization 70%, which was 47% in FY22 on increased capacity, and in the subsequent slides you are saying that it is running at full capacity. So is 70% the optimum capacity? So for incremental volume growth, when is your capacity expected to come online? Just connecting the dots.
70% is the maximum utilization. It depends on how you calculate. We don't calculate, the in-between cleaning hours. The facilities are mainly multi-purpose in nature. So there is cleaning happening between campaigns. So 70% is the optimum.
I was just reading from your presentation slides where you are saying 70% and then in subsequent slide you are saying it is currently being fully utilized.
70% is full capacity. That's what I would say.
70% is full capacity utilization because this is a multi-product facility. When if I manufacture a given product, I can reach 100%. Okay, if I manufacture only a single product, but since there are multiple products which keep on happening, and as Dr. Shirish said, we run campaigns. Where in a given campaign we run, let us say, X number of batches for a product, depending upon the orders in hand. Okay. And once the campaign is completed, we move over and switch over to the next product. Now this switch over takes time because the equipment has to be cleaned up, and only after that you can start the next product. Okay, so because of this switch over, there is a time which is lost. So as a result of that, we consider that 70% is somewhere around reaching the peak capacity. With a few maybe tweaking, we can increase it maximum up to another 3 to 4 percentage points. But beyond that, you won't be able to manufacture because it's multi-product. Yeah.
Okay, so incremental volume growth in subsequent quarters will be through debottlenecking. Is that fair understanding?
Yes. There is a lot of debottlenecking which is currently going on at the site. So that is also going to increase the volumes.
Fair. And sir, you're saying that out of your 1,200 plus customers, how much would you be supplying to distributors and how much would be through end clients? 1,200 plus customers in previous quarters, it was 1,300 plus. So just again.
Yeah, so that keeps on changing quarter on quarter depending upon the product and depending upon the geography that the product get into. But I would, for distributors versus direct sales, I would say is somewhere around 46 to 48% would be through distributors and the balance amount is direct sales. Yeah.
Okay. And one last question for Ashish sir. How has the working capital behaved this quarter? Since there is so much of disruption on the supply side, inventory stocking.
So we have continued to increase the inventory levels. Okay. So the working capital is high at this point of time as well. We are just keeping our ears and eyes open as things normalize, the war situation comes under control, okay, and whichever geographies there is a lockdown, if the ones those start opening up slowly, they will normalize the stock levels. So, but yes, as things stand today, we are at a higher working capital and inventory levels as well. The receivables have come down very well, okay, but the inventory levels are still on a higher side. But that's a conscious call that we have taken. I mean, had it not been so, then we would not have been able to have increased our top line 35% last full financial year, and almost same rate even in this year. We would not have been able to reach that 32% in this year. So this quarter entry. So I mean, that's the call which we are taking consciously, considering the volatility and the turbulent times that we are living in.
So I got it. Thank you and all the best.
Thank you.
Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Naresh Vaswani from Samiksha Capital. Please go ahead.
Yes, sir. Was there any revenue which got deferred in the Q2? And if yes, what would be the quantum of that?
You meant Q4 or Q1?
No. From Q1 to Q2.
FY23, okay.
Yes. In this quarter, I am asking, was there any shipment which has got deferred and would come into Q2?
There have been a few shipments which we had planned towards the last week of June, which have got deferred, and we have been able to make those shipments in this quarter. Yeah.
Okay. And in terms of your opening remarks regarding the progress in the CMO, CDMO molecules, wanted to understand what is the nature of these molecules? Are these patented or generic? And also, what is the value addition which you are providing to the customers? Or I mean, why would the customers come to Supriya Life Science for these molecules?
Okay, these are generic molecules, and of course, there are newer applications of generic molecules that are also coming up. To answer your question, why the customers are coming to Supriya, in one specific case, it is because of our capability to do those kind of processes that has worked well, and we are at a stage with that customer where we are likely to get orders for first commercial quantities, I would say. So it's a mix of, I would say, old generic and some new applications of the generics at the moment. In the future, the mix could change.
Sure. And we had got the CEP for salbutamol. So have you started the supplies in Europe for that?
It's in progress.
Okay, so this year it will pick up in the subsequent quarters, right?
We expect so.
Okay, and one last question. So this quarter we have done 31% revenue growth. Would it be fair to say that for the full year we will maintain that sort of run rate for revenue growth?
Historically, if you look upon it, for the last 4 to 5 years, we have grown at a CAGR of almost 24-25%. We are confident of maintaining that run rate. But at the same time, having said that, there are a lot of opportunities like what Dr. Shirish said. Some of those opportunities we are able to commercialize that much better. Yeah.
Sure, sir. All the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Tejas Mehta from Omkara Capital. Please go ahead.
Yeah, hi. Thanks for taking my question. Just once again, coming back to the capacity utilization and the inventory levels, can you quantify the value of finished goods inventory that is lying on the balance sheet today that we manufactured in Q2 and will be sold subsequently?
Yeah, just give me a minute.
Yeah.
So the total inventory which is lying in the balance sheet as on date was about 100 crores.
Yeah, and how? So how much will be the finished goods inventory of this 100 crores?
About 24 crores.
Okay, no, because I'm just trying to understand. I'm trying to relate the two things. You said 70% utilization we achieved in the first quarter, but the revenue with the finished goods inventory looks pretty low, just about 125 crores. So I'm trying to understand, the numbers. How do we read these numbers?
So that, see, again, let us understand that what you're seeing over here is just the cost of those finished products. When you're considering the revenue, obviously you would have to, there's a margin which would come into that. So every product has a different margin structure. Okay, so that's how it is. Yeah. And I am also sitting on 32 crores worth of work in progress. So my total almost finished and work in progress stock, semi-finished stock is about 57 crores.
Okay, got it. And how does the product basket mix change quarter to quarter? Because I believe it varies quite frequently, right, from Q2?
The seasonality is in the cough and cold segment mainly.
Okay. Right, because I'm trying to understand that probably some quarters there will be higher VAT and the value-added products, or let's say higher margin products or higher price products may be dominating, and some quarters like first quarter, the other low value-added or let's say low margin products must be dominating. That's what I'm trying to understand, because when you're talking about 25% growth for the full year, it's kind of a number of about 550 odd crores over the next 3 quarters. So what would be driving that, considering that we are already at 70% utilization of the existing capacity?
It depends upon the products that are manufactured, okay, and which depends upon the orders in hand. There are some products which get manufactured start to end in, let us say, 1 day. There are some products which may take about 7 to 8 days. Okay, so it's I mean, for a multi-product facility, it is very difficult to. With the same 70%, I can almost double my revenue as well. Okay, I can do half the revenue as well. Depends upon the product and the production cycle for that product. So it's a bit complex, yeah, but we manage it on the basis of our experience in this field and on the basis of information with regard to the orders in hand.
Okay, got it. And in terms of the revenue share from the developed markets, where do you want to be, say, by FY24-25? Currently, we are at 42% of the revenue. Where do we want to be in the next couple of years?
So, if you look at the trend, it has gone up from almost 33%, from almost 0 to 33%. Last year, for the full year, we did 50% plus. This quarter, we are at 44 odd percent. The higher, the better. That's what the target is. So, I try and understand. For the next couple of years, we are seeing a lot of our existing products, which we till now are selling in the semi-regulated markets. Some of them already got registered. The rest, some of them are in the process of getting registered. So the next couple of years, once they get registered and we start selling them in the regulated markets, the share is going to go up. That's how I look upon it. As to what it's going to be, only time will tell, but it's going to be better than what we have right now. That's for sure.
All right. Okay, got it. Thank you so much.
Thank you. The next question is from the line of Tushar Bora from MK Ventures. Please go ahead.
Yeah, thanks for the opportunity and congratulations to the management for a good show YY. Sir, just a couple of points. First, you mentioned this in the previous question that few of the existing products, we should start selling in regulated markets. So, if you can help us understand better, either with the exact names or maybe, if not qualitative, some quantitative data, how many products are we talking from the existing market that will move up? Which products, if you can give specifics and timelines as well?
We won't be able to give the specific names of the products, but these are in the allergy segment and, cough and cold segment. That's where we are seeing increasing requirements from the regulated markets. So if you ask me to give a number, these are about 4 products.
And when this should happen this financial year, we should start seeing revenue, or have you already started seeing revenue?
In some cases, we have to, do a submission of a drug master file of something that is already available for the other markets. So it's a submission of the drug master file, approval of that, and we are working with customers along with them to, do the submission. So the horizon could be 18 months to 24 months to achieve significant volumes on these 4 products that we're talking about.
Okay. No, so we have not yet started booking revenue, let's say, from markets like US, Europe for these products. Anything that will come in FY23, sir, from any of our existing product basket? Fresh sales from...
Not in FY23. These are the early supplies that are happening for validation quantities for the customers.
Got it, sir. Second, if you can help understand the CMO, CDMO opportunity slightly better. I think you mentioned in one of the previous responses that one product you may be close to signing off for a commercial something. If you can share more qualitative inputs on the entire pipeline.
So on 2 products, we are at a stage where I said that we are just waiting for the purchase orders for the supply of first commercial quantities, which will help the customers perform production scale batches and their submissions. That's the clear progress on 2 products. And on quite a few others, we are in the lab. In some products, the lab samples have been given. The lab samples are under assessment. In a case or two, the lab samples are okay, and we have been asked to move on with the next stages. So this is how it is progressing. There are about 7-8 projects active like that at various stages.
And anything that you would deem substantial compared to your current revenue size that hopefully we would have more inputs on in near term, maybe some announcements related to that or some more qualitative details available, say by next phone call?
We expect some of these to contribute significantly. That's our effort. That's all I can say. Otherwise, we wouldn't pursue these opportunities.
Sure. Sir, the anti-anesthetic product, which is one of our top 3 products, you mentioned that there's been a major revenue jump in this quarter. I think the segment as a whole gone from 10 crore to more than 50. The share of Europe has gone from about 8 crores to 24-25. So we can expect that the penetration of anti-anesthetics has gone beyond Europe, say some of the other regulated markets also in this quarter.
Yeah, so this quarter has been good, and if you look upon it, even the quarter before that, we did good in this particular therapy. And going ahead, we are confident that we'll be able to maintain a good growth in that particular geography. Plus, we are also looking at other regulated markets for the same product. Initial stages as of now, but as and when it starts getting converted, that will also be adding a huge value.
So this has been Europe-centric. We are seeing interest from US now.
Yes.
Any supplies in this quarter, sir? Q1 to US actually?
Just the initial quantities for qualifications.
And sir, it would be fair to assume that the kind of traction we've seen in this product or this segment in Q1, we should be able to maintain this kind of so there is clearly no one-off element, and we should be able to maintain the momentum through the year without getting into specifics quarter by quarter. But overall basis, we should see a substantial growth from this product category.
We see a substantial growth. We'll see a good growth as far as this particular therapy is concerned. We are confident about.
Sir, just one clarification on one of the previous responses. We did about 530 crore revenue in FY22. Historically, we've managed to grow revenues at about 24-25% CAGR. Safe to say, close to double in revenues over a 3-year time frame. Is there a reason why we are not, comfortable with that kind of a run rate? When we say that we will hit 1,000 crore by FY26-27, is it just something that are we being conservative?
We are being conservative. It's always better to declare and over-deliver. That's what we believe. Okay, we did that in the last financial year, which was the first financial year for Supriya after getting listed. So that's been our thought process, and we'll continue with that. So whatever we say, we believe that we should over-deliver on that. So that's very good. Yeah.
So
and as I also said along with that there are a few projects which are big projects, and if we are able to deliver that, not if it's only a question of when. Once we are able to deliver that, that would definitely be an upside to what we have just projected.
So, would it be fair to take your revenue CAGR number as a better indicator of possibilities? Say next 3 years, we should be able to maintain maybe a 24, 25, whatever in that vicinity run rate. Should we take that as a better indicator of execution capabilities rather than going by a specific number?
Yeah, you can look upon it that way. Historically, that's what we have done, and the upside now is that over there we are sitting on limited products. There were other products, but not major in the regulated markets. Now, over the next 2 to 3 years, we are going to see a lot of our existing products in the regulated markets. Plus, you have the new products that are being rolled out. The capacities are going up, and the CMO, CDMO opportunities which are there in the offering. So all these factors taken together, we are very positive, and we should be able to do better than what we are saying. That's what we strongly believe. But anyway, keeping our fingers crossed and trying our best to reach there.
And I think, Tushar, the one market which we have not discussing, recently I visited the Brazil, which is Latin America, which is also now gearing up. The new standards like the GMP, etc., have been started implementing by this market. Current source is only China, one source. Now they have to qualify second source with GMP certificates, etc., by 2023 March. So the process is already started on.
That's great to hear, sir. So is that possibly could emerge as a big market for us? If you can share maybe more.
So see, Latin America is also one of the biggest market for us, and it is also increasing in a larger way. Because as I told you, current source is one, and people have decided the country rules and regulations have changed. The country itself has decided for the second source, and second source, whoever is going to be qualified will be with the GMP certifications and the approvals of the products by filing the drug master files. So this is another thing which another 6-7 months you will see in this market a good trend of exports.
Fantastic, sir. That's very useful. One last question on the anesthetic product in US. Sir, are we also working with innovators for some of these new clinical trials for new indications like gaming addiction and COVID-related depression, etc., or anything around that?
Too early to say anything on that.
Sure.
I understand the question, but we cannot talk much about it at the moment.
But safe to say, sir, that we would definitely be a relevant company when it comes to for innovators to look at for API supplies, given our capabilities and scale.
That's our aspiration.
Got it, sir. Thank you so much. I'll join back in you.
Thanks, Tushar.
Thank you. The next question is from the line of Ashish Ugranwar from InvestQ Investment Advisors. Please go ahead.
Yeah, hi. Thank you for the opportunity. So, in the previous comments that you made, I mean, the range of revenue growth. I mean, when we say 1,000 crores in the 5 years, it would be say 14-15% CAGR, and then we talk about 24-25%. So the band is quite huge. I mean, you would probably have certain aspirations of growth, and the execution capability probably would be somewhere in mid. Is that what one should expect from Supriya? Because yours is a newly listed company, that's why these questions from us. I mean, how do you think in terms of your execution and possibilities that you see for your business overall?
We got a professional team over here, okay, and it's well led by the promoters. We have got more than 35 years of experience. We have done exceedingly well in the last 4 to 5 years. We have been able to register products in the regulated markets, multiple US FDA approvals, 3 times of US FDA approved, and other authorities as well. So we are very confident that whatever capacities we are building up and whatever new products that are being rolled out and whatever new geographies we are getting into or making efforts to get into, we'll definitely be able to convert. Yes, as Tushar stated earlier, we are being conservative when I give you the percentage and in absolute value terms, we are being conservative. If we are able to achieve that, we'll be very happy, and I think you should be able to overachieve that. But anyway, let us not get quoted for that. So it's always better to under declare and over deliver. Yeah.
Okay. And with the kind of developments that you mentioned in terms of CMO, CDMO, that might be there, right? Or you going to regulated markets or increasing the share of regulated markets and stuff. The margins even actually are pretty good in terms of 40%. So how do we see these? I mean, one can expect these to sustain, or what's the band that one should look at for Supriya that way, given the mix and geography and everything that changes over a period of time?
I will maintain what I said in the earlier earnings call as well, wherein I stated that while yes, the existing products which are getting into the regulated markets, the margins would be higher. At the same time, there are new products which are getting rolled out into semi-regulated markets where the margins are lower. Plus, we are also adding up capacities. When you add capacities, typically it takes about one and a half years for any plant or manufacturing block to reach its peak capacity. So till that point of time, the revenues which are generated are not commensurate with the expenses that are being incurred or the overheads that are being incurred. There would be always a push and pull of all these factors. But yes, what I can assure you is going ahead, you will be maintaining healthy EBITDA margins and healthy profitability. Yes, that's for sure. Yeah.